Hello, good day, guys. My name is Nick, technical analyst Forex. Today we shall be looking at the technical analysis on the currency pair gold, and we'll be looking about fundamentals before we move right down to technicals, which is purely what we're going to be seeing on the chart. Now we have seen that gold price forecast at $1,970, looming the U.S. employment clues, produces the gold bulls as a confluence detector. Gold price retreats from weekly top after a 2-day run up, while cautious mood ahead of the top tier data. Events join reassessment of Fed bias to challenge the XAU USD bulls, while preparations for US debt ceiling passage also appear to weigh on the gold price. US employment clues risk catalysts eyed for fresh impulse as the bulls have struggled to keep up their reins. And of course, we can see that the gold pair teases BS currently after keeping the buyers hopeful in the last 2 days, retreating from the weekly top of late. In doing so, the yellow metal justifies the market's dicey conditions as an optimism surrounding the US debt ceiling deal and receding hawkish bias about the Federal Reserve contrasts to the cautious mood ahead of the top tier US data. It's worth noting that the upbeat China cousin manufacturing PMI adds strength to the XAUSD upside momentum, even as the 40.0% probability of the Fed's 25 BPS rate hike in June prods the gold bias. Looking forward, the US employment clues and flash PMIs for May will be important to watch for clear directions. Also crucial will be the last round on the Fed talks ahead of the pre-FOMC blackout period for policymakers. Furthermore, the US senators voting on the measures to avoid the default conditions should also be eyed closely, even if the bill is likely to gain a huge support in the Senate where Democrats are in majority. Now, should the hawkish Fed bias remain slightly less, combined with a backed by missed US data, the gold price may witness a fresh recovery. However, upbeat data and optimism for the US economy may keep gold bears hopeful, as we can see already. So now on a technical level, we are seeing the confluence indicator signals that the gold retreats from 1,970, a resistance confluence comprising Fibonacci of 38.2% in 1 day and 61.8% in 1 week, as well as 23.6% for 1 month interim. With that said, we can see that the code currently soars around the 61.8% Fibonacci in 1 day, around 1,961, a day break. Confirming this from our daily time frame, of course. We are seeing that around 1,961 break, which will witness a bumpy road before testing a 1,948 support, including the Fibonacci 23.6% on 1 week. Now, following that, Fibonacci 161.8% on 1 day and 100 DMA can act as the last defense of the gold bias near 1,941 and 1,931 in 39 in that order. Meanwhile, the XAU has a successful break of 1,970 huddle could quickly recall the 1,976 on the chart, comprising the pivot 0.1 big RI. Now, should the gold buyers manage to keep the reins up, a run up towards the previously high of 1,990 and then to $2,000, round figure could possibly be ruled out. So now what to expect on technical level, we are seeing a possible momentum building and a breakout of this very important support zone at 1,951.36 could be a free fall to at least the next support zone at 1,931.91. So which is at about 200 plus pips from that entry point, of course, which is good money. And that's our technical analysis on today's currency pair gold. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at Goldman Sachs. And recently, we have been noticing that Fortinet fundamentals from the reported US cybersecurity incident last week is likely to be minimal. And it has been explained that FTNT has fell across 3% last week following the Microsoft blog posting explaining a cyber attack on the US critical infrastructure. Now, according to the blog, the attack is intended to disrupt communications infrastructures between the US Asia targeting organizations in Guam and the US as it is, and specifically called the Fortinet internet-facing FortiGuard devices, which were targeted by Volt Typhoon to gain initial access to the network. Now, what effect has this been having on the market? We have been seeing a total bullish and bearish appearing, moving slightly towards each other, confirming this on our 1 hour time frame, and it hasn't left the range of the 317 to 323 threshold, and we're expecting a possible pullback to cover at least these zones, which it had fallen from before it started having ranges. So we are looking at about 266 pips recovery, starting from this point, hopefully, which will signify a bullish rise back to the 344 zones. So that's about 200 plus pips from that entry point, of course, which is good money. And that's our technical analysis on today's stock market. Goldman Sachs. I remain your host, Nick. Bye for now.